Hello and welcome to this very special interview. Joining me today is a veteran of the life insurance sector, someone I have deeply admired over the years, has more than 3 decades of experience across financial services and has been a better part of that career has been with life insurance. Joining me today is Vighnesh Shahane, who is the managing director and CEO at Ageas Federal Life Insurance. Thank you very much, Vighnesh. A pleasure talking to you. And it's you've always been ever willing to be part of anything where investors, consumers are being educated. So let me dive straight into this very important subject of life insurance. In fact, almost all financial planners say that you must first get yourself a health cover, a life cover through a term insurance plan before you even start investing. My first question is that when COVID happened, because there was so much of trauma around everyone, we saw a spike in policies being sold, term insurance especially. Have you seen a dip post-COVID? Because one doesn't hear much anymore on these numbers. So what's it been like post-COVID?
Yes, Vivek, I'll answer your question, but thanks very much for having me here. It's always a pleasure to speak to you, and I guess we're speaking after a long, long time. So, real pleasure. Okay, to come back to your question, Vivek, the term insurance sales post-COVID, that's post 2021, have been gradually increasing on an absolute level. Now, what's the fun? The interesting part here is the number of policies have been decreasing. So, what you're saying is right, but the ticket sizes have been increasing. So it's obvious that people who believe in term insurance are paying a higher term insurance, and the products which have a limited pay give you a limited pay but a bigger ticket size. So I think more of those are selling. But the absolute number in terms of premiums since COVID is gradually increasing. The number of policies are dropping, and as a percentage of AP for a company, the number is dropping. So what you're saying is actually correct. Post-COVID, there seems to be a little bit of slowdown. There was a huge exponential growth during those 2 years of COVID in health and in term. And there was a lot of people talking about it. There were a lot of people, we heard a lot of discussion, social talk, conversations in parties on having health and term insurance. This the conversation and the topic of discussion has come down a bit. People are talking less about term and health insurance as much as they were talking during COVID. So, yeah, to an extent, what you're saying is correct.
Vignesh, recently Policy Bazaar did a survey, and that revealed that while the awareness levels of life insurance, term insurance have gone up significantly, and for reasons that you talked about earlier. But the purchase, so the person who is aware of it knows it's important, but the purchase is very, very slow compared to the levels of the awareness. And one or two reasons that they gave on the basis of people who they spoke to were that, and it's ironical that despite India being probably the country with the lowest term insurance cover rate, people found it expensive, people found it complex, complicated. What are your thoughts on that?
No, absolutely correct. I agree with you, Vivek. The awareness of term and health, especially even before COVID, was very high. After COVID was out of the roof, but it's not commensurate to the purchase and to the increase of term and health insurance. And there could be various and many reasons for that. While some people might find it expensive, reinsurers raise their rates at least twice during COVID, for which the term insurance policies became more expensive. Even then, be that as it may, term insurance in India is probably the cheapest in the world. It is the right time to buy term insurance, even after reinsurers have raised their rates. It is yet the cheapest form of insurance. I suspect, Vivek, the reason for this happening and is because I think there's not enough push from the distributors. Because I said this about 7 years back when we spoke together, when you had come down to our office. Term insurance is normally a small ticket size and gives you a smaller absolute commission. So it's not pushed by the distributor who would much rather sell high ticket savings products which give a higher commission. So I think it is there is a segment of people who might find it complex, where I think it's not very complex. There are a segment of people who might find it expensive as compared to earlier, but yet it remains very economical. But I think there's not enough push from the distributor side.
Vignesh, you've been a great believer in the power of digital and the use of technology every time I've spoken to you. And I think that leap of faith really happened during COVID. And I don't think the industry has been given as much credit as it deserved. That the fact is that even during lockdown and with such high amounts of claims, the industry was, clocking almost upwards of 99% of claims paid out. And, overnight, a big switch had to happen towards digital. You're not a industry which could have said, hey, hang on, we're in lockdown, I can't pay you your claim. And that, I think, has continued because when you go digital in that big a way, then things change, and you have a regulator today who's also pushing digital in a very, very significant manner. What, according to you, could be the next innovation? You talked about this whole industry, and you've been part of it ever since the privatization happened, has still remained dependent on an agency force, which may, for their own reasons, choose to sell a certain set of products, which is true of any industry. But do you believe as they say, the UPI moment has come now, where insurance companies like yours also need to go beyond, at least for term insurance, go beyond, only depending on an agency force and come out with greater innovations on the digital side?
Okay, Vivek, long question.
I know, I'm sorry, but
I'll answer it in installments. The first was in COVID. I think yes, the regulator and the insurance industry took a lot of laudable steps, ensuring not only 99% of the claims happened. I think that was a moment of truth, and I don't think the insurance industry gets enough credit for that, for the 2 year period when we actually serviced and accepted claims and paid out claims, and that too within the stipulated time. So I think the regulator and the industry, a lot of credit to them. But Vivek, not only claims increase, even the pickup of policies, even the sales of policies increased during the COVID time, especially when you were, it was tough because you were remote sourcing, you're not meeting the customer, but there were some laudable steps taken by the regulator, which promoted, I don't want to get into details, which promoted remote sourcing. So yes, you're right. I think the industry really grew in terms of sales, and I think the industry really made its presence felt while accepting and paying out 98 or 99% of the claims. And in the stipulated time, when they couldn't see the customer or collect physical documents from the customer, that was extremely laudable, and I don't think the industry gets enough credit for that. Your second question was on digitalization. Yes, I'm a big fan of digitalization, and I believe digitalization should happen uh, in every process. It should not be just selling or buying. It should be every process should be digitalized, which adds a great experience, which enhances the experience of the customer. According to me, you asked me if the UPI moment in insurance has come. I think, to my mind, and I need to be diplomatic about this. I think bank assurance will remain the dominant, hygienic, low-cost platform channel to sell insurance for some years. I think digital and online sales is picking up. The UPI movement could have even come for insurance in lesser complex and simple commoditized products like you have in non-life, you have travel, health, motor, and possibly term. But life insurance, 90% of the sales, or more than 90% of the sales, are long-term complex savings plans, which would require an eyeball-to-eyeball sale, which would require an advisory sale, where you would require a bank, a branch, agent. So I think that won't change. But yes, for the simpler, non-complex, commoditized, low-ticket insurance products, yes, the UPI movement could possibly have already come.
What about young people, Vighnesh? Far more digitally savvy, far more comfortable, aware, uh, and maybe, it's important to keep reiterating this fact that why it's so important to buy or start at least with a term insurance policy at a young age. And I know you've answered this question thousands of times. I've probably asked it thousands of times. But why is it so important? And, they're digitally savvy, the younger people today. They're not, risk averse to use digital, probably like your and my generation. And term insurance is a fairly simple product. I mean, one was reading just the other day, IRDA has now said it should just be one page or two pages at best. I mean, the policy. So again, two questions. One is, at least for term insurance, why is there not, a digital push? I take your point on savings and investment products may need a little bit more of engagement. And secondly, why is it so important for young people to quickly get on and get themselves a term insurance cover?
Absolutely, Vivek. I think the second best time to buy insurance is today. The best time to buy insurance was yesterday. I think young people should buy insurance. When you're younger, the mortality rates are lower, so you get term insurance at a cheaper rate. You're likely to be in better health when you're young, so you get the benefit of good health. This health could you could have some lifestyle diseases like blood pressure, cholesterol, or blood sugar, which could escalate the price of your insurance premium for term products or any product for that matter. So I think you're absolutely correct. Young people should buy term, at least term, and the pickup should be there. But I have to say, Vivek, I don't see that happening. I don't see that happening, and it worries me, and I'm actually wondering why it's not happening when the awareness, as you rightly mentioned, the awareness is so high. Young people are savvy, they realize the importance of insurance and term insurance, and they should be buying it as soon as possible, but that's not happening. For some reason, that's not happening, and it's very difficult to put a finger on that reason.
Vignesh, one of the big questions that most young people have, and these numbers, of course, keep changing as we see inflation happening as well as lifestyle costs go up, because many people previously were happy or felt happy that they've got a 1 lakh, 2 lakh cover through a money back plan. But how much term insurance should a person take? Because again, as the name suggests, and many people don't know this, that once you lock in with a certain premium amount, and as you said, the younger you are, the lower that amount is, that will probably be the same amount that you'll pay for the entire term of that insurance. And this is something which many people do not understand. Uh, but how much insurance should one take into account? Because I remember when, maybe 20 years ago, if you had a 50,000 health cover, you were doing really well. And today, even if you have a 50 lakh cover, uh, your chances are that you are underinsured. So these things, these numbers change with inflation, with lifestyle changes, especially in cost of health care. which has gone up so significantly.
Absolutely. The Vivek, great question. I think the rough and ready and the short answer to your question, the thumb rule would be 13 times or 14 times your annual income. But that's only a thumb rule, the back of the envelope kind of calculation. I don't think you should be guided by that. Uh, what you need to do before buying insurance, term insurance or any insurance for the matter, is to do a detailed needs analysis. It's just like going to a doctor to do a medical examination. You go to a financial doctor to see your financial health. You need to do a detailed needs analysis, which quantifies the amount of loans, how leveraged you are, what your net worth is, and basis that what kind of lifestyle you have and what kind of lifestyle you would want your family to have. If God forbid something were to happen to you, you need to do a detailed need analysis and then figure out how much term you would require. Again, this is not a one-off exercise like you rightly mentioned. You need to do this every year. Because every year you could have lifestyle changes, you could have bought a house, you could have got a new job, you could have lost your job, you could have a new family member, and changes keep happening. So these things, this is not a one-off thing. You should do a needs analysis, whether or not you buy term insurance after that or not. You should do this needs analysis with your financial advisor once a year at least to figure out how much insurance your family would need.
Hmm.
But the rough and ready Vivek answer would be 12 to 15 times your annual income. But that's only rough and ready. Please don't be guided by that.
Yeah.
I would strongly urge people to invest their time to do a needs analysis. Figure out how much insurance you need and how much you can afford.
Vignesh, again, another thing which is very, not understood by most people is the fact that, so on the one hand, we are seeing an increasing amount of debt culture that is coming in. Again, people from your and my generation were very debt
Debt
averse.
averse.
But I was just reading a survey before I got into this interview with you, which says that, people, even from small town India, are 25 years old and they're taking their first loans. And why is it so important to, at least for the long-term loans and the bigger loans that you're carrying? I'm not talking of a 50,000 or 20,000
And
rupee
the and
loan
the and the
taken.
secure and the secured loans.
Yes. Why is it so important to include the value of that loan when you assess how much insurance you need? Most people think, okay, fine, this is what my family's lifestyle need is, but they don't realize that
But
I'm
they don't
taking a home
realize if
loan.
something were to happen to them and they're the sole breadwinners, the family would have to pay back the loan or have their house or car or whatever repossessed, which they wouldn't want in their absence. So for that reason, we should we should buy insurance against any secured loan or any loan we have so that our family is not burdened by your debts.
Hmm.
And that is something which is, and that is what I said by doing the needs analysis. The first thing you need to figure out is how leveraged you are. And you do not want to put your family in a soup after God forbid something, if God forbid something happens to you. You want them to continue living seamlessly and maintain the same lifestyle. You don't want them paying back your debts. So
One
yes, you're
final
right. You're right, Vivek. That's the first thing you should ensure. That is the first thing you should ensure.
Vignesh, one final question. Are you seeing an uptick in critical illness related features and products around term? Because again, this was something that started off fairly well many years ago, and perhaps with the health insurance sector, standalone health insurance companies coming in, uh, probably took a back seat. But did COVID bring that back? And going forward, would things like COVID, other diseases also get covered in a critical illness kind of a feature?
100% right. We've seen a great uptick. We have in our own company. So I'm sure it holds true across. I can extrapolate it across industry. In my company, I've seen an uptick. People asking, our distributors are actually asking for critical illness riders across our products. That means they have this feedback from the customer. So I completely agree with you that the awareness now, whether it's translating to sales or not, we'll know in some time. But the awareness and people are more vocal about the need to have a critical illness product in case something like COVID were to happen, in case they know that life is unpredictable. Tomorrow you could get up having anything. So people are very conscious of that fact that you can't rest on laurels. You need to be prepared for tomorrow. So I agree with you 100% that the demand, that at least the awareness for having critical illness around as a wrapper around the insurance policies has increased. I wouldn't say that sales have increased, but at least the awareness. We're getting this feedback from customers. We have a lot of focus groups with customers. We're getting this feedback from sales guys. We're getting this feedback from distributors that yes, our customers would want a critical illness wrapper around your insurance, or a critical illness rider around your insurance.
And is the list of diseases also expanding? Because I remember when these covers came, there were hardly 2 or 3 diseases which used to be covered
So
back
now,
then. Today I see ads saying 18, 19 diseases covered.
yeah.
So has that also happened?
That's also happening all the time. That's happening all the time. We have about 15 or 16 diseases, and it covers practically everything that could go wrong with you. And that's what customers, that's I think born out of customer feedback.
As always, a pleasure talking to you, Vignesh. Thank you very much for taking time out. And I look forward to many more conversations now that COVID is behind us. Hopefully, next time, again, face to face with you. So,
Yeah, we'd
thank you
love to
so
host
much.
you in our office, Vivek. You should come here. It was 6 or 7 years back, and thanks for having me here. Always a pleasure speaking to you.
Thank you so much, Vignesh.
Thank you.